when you talk about the foreign producers, okay, OPEC essentially doesn't exist in my mind anymore. It is Saudi Arabia. They are not being cooperative. You've got Venezuela, you've got Nigeria, you've got Angola, you've got countries that, if you think Saudi Arabia is in trouble in terms of the money they're short on their budget, think about what it's doing in a place like Venezuela. Saudi Arabia can't even produce profit per barrel at $30, considering what they've done to their budget.
Pure and yet they say they're willing to go to a 20 handle.
Yeah, because they've got hundreds and hundreds of billions of dollars of foreign reserves, right? But think about what that kind of thing is doing to an Angola, a Nigeria, a Venezuela. There is pressure. This is all about market share. Now, when you talk about shale, when you talk about the U.S. is the marginal producer now. It's no longer OPEC. It's not going to be OPEC that says we're boosting 100 million, or I'm sorry, 1 million barrels a day or cutting 1 million. It's the U.S. 2/3 of rigs have been idled. We've only lost 700,000 barrels. So why am I saying this is a bottom? Because that's going to snap back rather quickly. It's going to snap back rather quickly. You've got these builds in Cushing, but you're seeing a shrinking of gasoline inventories. Refineries are in turnaround, and they're going to go further into turnaround. They're starting to retool for summer blend gasoline. They're going to suck that out, and then you're going to see a spike in prices led by Brent, and that's when it's going to happen. It is a medium-term bottom, but it is a bottom.
But the thing is that for shale producers, it's not as easy to turn the spigot on and off as it is for the Saudis. It's much more complicated and much more costly. And I'm just wondering, if we get some sort of floor and a bounce back up above 35, what's to keep them from saying, great, we're not going to shut down, we're going to keep pumping?
Well, I think they're going to do that, but the problem is that shale rigs, as you know, dry up a lot quicker than traditional rigs. Here's where the problem is going to come in. The problem is going to come in with Brent, because the traditional rigs, it's 3 to 4 years of lag time before you see a barrel of oil. Shale can't turn on quickly, but they can drill much quicker. So if we get up for a period of time, which I think is going to be about July, where we hit about $40 and we stay there from the middle of summer to maybe late August, that's when you're going to see the shale drillers turn some of these rigs back on and continue to increase the rigs that they have. Most of the rigs that have been shut down have been 50, 100, 200 barrel a day rigs. They really were nothing. The big rigs right now, when those get shut down, the draws will come out very quickly, the supplies will shrink up. But it doesn't take as long to produce shale rigs as it does a traditional rig. So that's where you're going to see the Brent TI differential.
And Bob, what's your price target on both TI and Brent?
Well, I think Brent you're going to see up around $43, $44, and then I think you're going to see TI hit 40 and come off from there. The differential between Brent and TI has been a problem. I mean, right now for the refiners, it's actually cheaper for them to import Brent than it is for them to pipe from Cushing to the refineries in the Gulf Coast. It's actually cheaper to do that right now. So that differential needs to widen out. So I think you're going to see it temporarily, but it's going to be more Brent pulling WTI up, and the WTI is going to fall again from there. So I think WTI you'll see between 38 and 40. Brent will get up to about 42, 44. But this is a medium-term bottom. The oversupply is here to stay.